and just wanted to start by welcoming each of you. Thank you so much for taking time out of your busy afternoons to talk with us about this engaging topic of reconciliation and reporting. And just before we get into today's teleconference, I do want to really just take a moment and thank everybody who's here on the call. We are in the month of December, believe it or not, and it has been a very eventful year in terms of the first year of cost-based funding. And I just want to start out with some gratitude, just thanking everyone who's here on the call, as well as your teams and your loved ones, everybody who has contributed to just really the implementation of this first year of cost-based funding. I want to thank you especially for working with us as we are really just navigating the complexities of this new model. And now as we're coming toward the end of the year and talking about reporting and reconciliation, it has really been very much a team effort. And we hope to just continue to work with you through this reporting and reconciliation and leading into 2026 as well. So today I'm going to be joined by Mary Lee, who's an advisor on our team. She'll be walking us through the first part of today's planned teleconference topics. And so I'll just hand it over to you, Mary.
Thanks, Matthew. Hi, everybody. Before we jump in, I just wanted to go over some housekeeping items, which many of you will already be familiar with. So on slide 2, you can note that as usual, today's session will be recorded, and we'll make that recording available to you and share the link with the slides and the materials. Also, if you can please keep your microphones muted and your cameras off during the teleconference. And then we'll have some time for questions after we go through the slides, but you can certainly type your questions either through the Q&A feature while we're going through the presentation, or you can raise your hand when we get to the Q&A part of our teleconference, and when Sonia calls on you, you can unmute. If we don't get to any questions that you might have today, then as always, please email us at the ZZG or reach out to your early year specialist. And slide 3 just gives a quick overview on how to use the Q&A feature. Again, I think folks are familiar with it, but in case there are new folks on the line, so you'll see that there's a Q&A button up at the top left. So if you click on that, then like the panel opens up on the right, and there you'll be able to type in a question, just ask and then click ask, and then you'll see it posted. Also, you're able to look at other people's questions, and if it's something that resonates with you and you want to upvote it, you can click on that as well. So then we'll be able to kind of see the prioritization of questions that are coming in. But as always, you can always just raise your hand if you'd like to ask your question verbally. If the Q&A feature is not working for you, then we recommend that you log out of the teleconference, and then when you click the link to get back in, join through the browser. If you have Google Chrome or Microsoft Edge, that is preferred. It'll work better on those platforms. Okay, slide 4. So this just gives an agenda of today's teleconference. So we've got the standardized reporting template from the ministry. We're getting ready to send out our reconciliation instructions and templates for 2025. So we just want to connect to highlight what will be making its way over to you. We'll touch on the accounting and note disclosure guideline that sets out some of the requirements and guidance for your audited financial statements. And we'll review what needs to be submitted for CWELCC and school age funding. And then we'll have our Q&A portion. So slide 5 just gives a bit of a recap of the reporting and reconciliation timelines for this year's funding. You'll see that this month we'll send out our templates. So that'll include the financial annual information return, as well as the guideline on the financial annual information return and the note disclosure guideline, and the templates for school age. Then in January, that'll be our first deadline of any service provider who's in receipt of school age funding will be required to submit their reconciliation documents. April 26th, this is consistent with previous years, so providers are required to submit their audited financial statement and their FAIR. This year, the FAIR will also be used to reconcile your CWELCC. So where Peel is the overseeing SSM, we'll use the FAIR to populate the ministry's standardized financial template. And then once we have these details from you, then the rest of the year we'll be looking at recoveries, reconciliation, some additional connects later on in the year. And so that's generally what folks should be seeing for reconciliation for 2025. Again, just want to reiterate that it's very important to meet these timelines as it's going to have cascading impacts to reporting to the ministry, reconciliation, as well as your 2026 CWELCC allocation. Slide 6 goes over the ministry's approach to reconciliation for home child care agencies that serve multiple areas. So if you have your head office in Peel, then we are your overseeing service system manager. If you have active homes in other areas, then the service system manager in those areas are your secondary service system manager. So as your overseeing service system manager, you report your revenue and expenses for all your active homes to Peel, and then Peel determines your actual cost-based funding and your repayable amounts. Of course, your secondary SSM will likely be also reaching out and amending and adjusting their funding both throughout the year and at year end. But it does all roll up at the license level with the overseeing SSM. Slide 7 goes through the reporting requirements. So all agencies who receive funding from Peel, again, you have to submit your audited financial statement and your FAIR. So that's there's no change there. That's an existing requirement. If you serve children in multiple areas, then your AFS needs to include a supplementary statement of revenue and expenditures for your homes in Peel. Again, that's an existing requirement. There's no change there. And then in your FAIR, there'll also be a separate section there to report your statement of operations for your homes in Peel. So the change here is really around using the FAIR to reconcile your CWELCC. So the FAIR will look a bit different. Slide 8 goes over sort of like the specific pieces in the FAIR that differs depending on sort of whether where you're overseeing and where you're providing service. So if your head office is in Peel and you only have active homes in Peel, then you need to report your revenue and expenses for all your active homes. So, and that's part of your FAIR. If your head office is in Peel and you have active homes in Peel and other areas, then you'll need to report your revenue and expenses for all your active homes and your revenue and expenses for homes in Peel. And then if your head office is not in Peel and we're your secondary SSM, then you'll need to reach out to your overseeing SSM to get details on what reconciliation will look like. But Peel will still require your revenue and expenses for homes in Peel. And then moving on to slide 9, this is where we kind of talk about the new requirements that we identified in the service provider handbook for this year. So with the introduction of cost-based funding for CWELCC, there's new note disclosure requirements for your audited financial statements to align with the CWELCC rules. And the guidelines are really intended for your accountants and your auditors who are preparing your financial statements. The first recommendation that's in there is when you're reporting your expenditures to make sure that you report your gross and not your net expenses. So you're not subtracting, your funding and your offsets when you're reporting on your expenses. So this makes sure that your CWELCC allocation and funding is accurate because CWELCC is a cost-based approach. The guidelines also set out requirements for note disclosures. So this includes a request for your summary of reconciliation. So listing the funding that you've received and you've spent and that's repayable to Peel. And then this may not be applicable to everybody, but if you have capital assets, then there's requirements around how they should be reported based on whether or not it's an eligible expense under CWELCC. So, we'll ask for you to provide the details of your capital assets. So you're reporting its value and its cumulative amortization and your annual amortization, but you're separating out those assets by whether they're eligible under CWELCC and whether they are not eligible under CWELCC. Finally, in the guideline, there's some suggested approaches to proration. So that's just, providing some guidance around shared expenses when you're serving 0 to 12. And there's also lots of examples in the guideline as well for, the accounting treatments and the note disclosure requirements. So that should help you with completing your reconciliation for CWELCC and school age. I know that was a lot of information that I whipped through. I think most of it is familiar with and consistent with previous years. And I will turn it over to Matthew to go into a bit more detail.
Yeah, thank you so much, Mary. So now we're going to shift our attention to some important information related to CWELCC reconciliation in the FAIR. Just to kind of cap off some of what Mary was sharing, once again, this is a lot of information related to reporting. We will be sending a package over to each of you that has some of those products that Mary was talking about related to, the accounting guideline, obviously the FAIR template and what have you. We want to ensure that you have all of the information at your fingertips so that you can engage your auditors early. And then really, of course, we are always available in terms of any questions that you might have related to reporting, so that you just have an accurate picture of what your reporting requirements are for 2025 funding. Okay, so you have that commitment from us to just continue to work with you through reconciliation for this year. If we can go to the next slide, I do want to talk a little bit further about the FAIR template. So if you've been operating in Peel for some time, the FAIR should be something that is relatively familiar for you. I do want to just start off by just sharing just how happy I am when it comes to the reporting for this year, because the team has been very hard at work to introduce some very significant efficiencies related to the 2025 CWELCC reporting. So starting this year, for all agencies where Peel is the overseeing service system manager, CWELCC reconciliation will no longer involve a separate reconciliation template. So agencies will need to fill out the FAIR aligned with your audited financial statement. And through that process, we should be able to get you closer toward just completing your reconciliation for the year. As Mary discussed on the previous slide, depending on your operating reality, the specific reporting requirements for your agency might differ slightly. So what we plan to do is send a communication with the relevant templates specific to your operating reality so that it's just easier for you to be able to connect the dots and see specifically what information needs to be collected from your agency dependent upon your operating reality. Okay, so stay tuned for that. So just digesting some of the information that's here on this slide, we have updated the FAIR this year with some quality of life improvements. So we have some of the details here on this slide. So this year, the FAIR will support you by calculating your actual cost-based funding and allocation in lieu of profit and surplus to show you what values you need to enter into Gov grants. It also has a helpful default proration method that will be applied to shared expenses between 0 to 6 and 6 to 12 children. It includes some helpful sections so that you can report any ineligible or non-base expenses, and it also automatically generates a summary of reconciliation, which can be included in your audited financial statements. We've also taken some time to work with our colleagues in our policy division so that we could trim down the list of reporting requirements so that we are only collecting those key performance indicators that are relevant for this year's 2025 CWELCC reporting. So all of these efforts are really designed to be able to support you in terms of filling out the FAIR so that you have a better experience during reporting and reconciliation. We've also developed some helpful guides that will support you in filling out the FAIR. So we will have a pre-recorded training video as well as a detailed instruction guide, which will walk you through step by step how to fill out that FAIR template. And that will all be coming together as a package in the coming days. So we hope that this is going to be of value to you. And we really just want to encourage you to make full use of each of these resources. Moving on to the next slide. Let's talk a little bit about the ministry's standardized financial report. So about 3 weeks ago, we received an early holiday present from the ministry. That was, of course, our 2026 CWELCC guidelines, as well as the long anticipated standardized financial reporting template. Again, I do want to take a moment to just recognize the effort of the team who were hard at work as soon as that release was made available to support the sector by trying to incorporate the reporting requirements from the standardized financial report into the FAIR template for all of those agencies where Peel is your overseeing service system manager. So to support you in understanding what is new this year, I do want to draw your attention to a couple of the reporting requirements that are outlined here on this slide. So we already should have by this point, or by the point of reconciliation, some of those operational details and a breakdown of your financial information. So those have been integrated so that we can seamlessly roll up as many of those as possible on your behalf. I do want to direct your attention to a new field that is being requested by the ministry, which relates to the average paid vacation and sick days for home visitor staff. That is a new reporting requirement that is included in the FAIR template because it's a new one that the ministry has introduced. And so we're just flagging that for your attention so that your bookkeeper, as well as your auditor, you can give some advanced thought toward that reporting requirement that we will be coming to you to report on shortly as well. Okay, so within the FAIR template, we've also included some helpful definitions for every single data field, just so that you have a really clear picture on what is being requested as you're filling out the FAIR template. I also want to just direct everybody's attention to deadlines. Okay, so this year, the ministry has set a strict deadline for Peel to submit all of our rolled up data by June the 1st. And so as such, just recognizing that we do have a deadline related to April the 30th to submit your audited financial statements as well as your FAIR. I'm just alerting everybody to those deadlines because it is very important this year. Please, let's work together in terms of ensuring that we're engaging our auditors early with these reporting requirements, making use of some of the reporting tools that the team has put together in the package that will be coming to you in the following days, just so that we can avoid situations where reporting is late, and then it just creates a trickle effect in terms of our work with the ministry, as well as just accountability for the funding from 2025. So if your head office is located outside of Peel, please reach out to your overseeing SSM because they will have all of the details related to what it is that you need to report. But for those of you who have your head offices here in Peel, of course, just please give note to the April 30th deadline, just to allow our team, I think that provides us with about a month to roll up all of the information for Peel to provide back to the ministry for the June 1st deadline. Okay, so let's work together on those deadlines together. Moving forward to the next slide, slide 13 provides an overview of how funding recoveries work under the cost-based funding model. We've talked about this in previous teleconferences, but just since we're at the end of the year, wanted to underscore some important details. So under cost-based funding, it is the responsibility of the overseeing service system manager to compare your total cost-based funding allocation with the revenue and expenses for all of your homes. Now, there are two main instances where you may experience a funding recovery. That is where your actual program costs are less than your program cost allocation. That's a situation where you have a surplus or you have some underspending, and that will be recovered. Secondly, there are situations where your actual base fee revenue that is collected is higher than your expected base fee revenue offset. In both of those situations, you could be subject to owing a funding recovery. Also important to note is that the allocation in lieu of profit and surplus is adjusted based on what your actual program costs are. So once again, in the first scenario where your actual program costs are less than your program cost allocation, you will also see a corresponding adjustment downward to your actual profit in lieu of surplus as well. Okay, so just wanted to make everybody aware to those principles and those rules related to cost-based funding. For all agencies where Peel is your overseeing SSM, after you've completed the FAIR template, you should easily be able to see what your final year entitlement is and whether there is a recovery. We've tried to build in calculators to help you to determine if you will owe a funding recovery based on the reported revenue and expenses. So we hope that you can make use of that. It's built into the FAIR template. And if there is a funding recovery, we will, of course, work with you to communicate what that recovery is, and where possible, as we do, we seek to automatically deduct any recovery from future payments through Gov grants. So once again, we'll try to work together with you this year, as there could be slight nuances depending upon your operating reality and whether Peel is your overseeing SSM, whether there's recoveries from other areas where you operate, we'll try to work together this year as our first year of reconciliation related to cost-based funding. And once again, if you are on this call and your head office is located outside of Peel, just a reminder, please do reach out to your overseeing SSM as they will be in the best position to provide you with details for how funding recoveries will work this year. Moving forward to the next slide. It might be helpful to go through a very quick example to illustrate how funding recoveries work. And this example applies to those agencies where Peel is your overseeing service system manager. So in the example here on this slide, Home Agency A has a head office in Peel with active homes in both Peel and Toronto. The total amount of funding they receive from both service system managers it's close to $1.3 million for program cost allocation. There is $320,000 for expected base fee revenue offset and $77,000 for the amount in lieu of profit and surplus. Now at year end, I'd like to direct you to the column in the table that's highlighted in orange. So this has to do with the recovery amounts. So the column in gray represents what this agency reported related to their actual costs and actual base fee revenue collected in 2025. And resulting from those actual amounts, you can see that their actual program cost for all homes was $20,000 lower than the total program cost allocation. And the actual base fee revenue collected was $10,000 higher than expected. So in both of these scenarios, this agency would be subject to a funding recovery. As I mentioned in the previous slide, since their actual program costs were lower, there is a corresponding slight adjustment downward to their actual amount in lieu of profit and surplus, and that's in the amount of $2,000. So in total, just using these numbers here, the amount that this agency would expect as a recovery is a total of $32,000 for 2025. Okay, so we hope that this example illustrates how funding recoveries would work. And once again, as you are working through reconciliation this year, if you do have any questions, please do reach out to us so that we can walk this through and we can just explain how this process works. Moving forward to slide 15, we did want to just share some information as well about actual base fee revenue. So hopefully this year you've been able to make use of our helpful operating budget template so that you can track your actual base fee revenue. As a reminder, the cost-based funding formula calculates the maximum amount of eligible costs that will be covered, and that's known as your program cost allocation. And this program cost allocation is comprised of your base fee revenue plus your CWELCC funding. For 2025, the funding formula estimates that the amount of base fee revenue your agency will collect using your reported enrollment, your expected base fee revenue offset, and the service days for each of your active homes. Now, this fall, you may recall that we reached out to LHCC agencies in Peel to share your projected base fee revenue. And if you shared this information with us, we took a look at it so that we could adjust your base fee revenue offset with your agency's projected revenue. This was all in an effort to better support you with a more accurate expected base fee revenue amounts to reduce the impact of funding recoveries at reconciliation. Because as you may be aware, once again, under the CWELCC model, if you collect more base fee revenue than expected, this amount is considered an overpayment, which is then recovered. There may be situations, as we're approaching reconciliation in this first year of cost-based funding, there may be situations where an agency collected less base fee revenue than what was expected. And in those situations, typically, your expected base fee revenue offset should remain in place with the difference taken as a loss. And we realize in the second scenario that there are some challenges that we want to walk through this year. Just in general, LHCC revenue projections tend to be a little bit more complex than center-based, with children leaving and being added at given times throughout the year, while your overall service days remain the same. So there might also be cases where perhaps there were extenuating circumstances for parts of 2025, which may have contributed to lower actual base fee revenue collected. So if either of these scenarios applies to you and you're noticing that your actual base fee revenue collected is less than your expected base fee revenue offset, as we've shared within our teleconference in August, just repeating it once again, please reach out to us. Reach out to us proactively to your EYS so that we can look into that situation and work with you. Secondly, in 2026, we will be collecting some more projections from you as part of a GovGrants update task so that we can get a better picture of what your actual base fee revenue is. And lastly, related to those circumstances where, there might be an agency who, for part of the year, experienced some extenuating circumstances, which could have contributed to less base fee revenue collected than what was expected. We will actually be coming back to the sector later in 2026 with some more details related to how we can better assess and support agencies who found themselves in this situation with extenuating circumstances. So we'll be back in touch with some more details. But in the meantime, if you find yourself within this situation, please, we just encourage you, as we did in the summertime, to just reach out proactively to let us know as well. Moving on to slide 16. Just talking about some additional reporting, and this is actually our last section in the teleconference today. So on slide 17, this is a reminder for any agencies who serve children ages 6 to 12. As shared during our last teleconference, the deadline for school age funding reconciliation is January 30th, 2026. Excel-based templates will be shared out before the end of the year so that you can have a better picture of what data is going to be requested related to your total expenditures and any key performance indicators related to school age funding. As an important note, if you have any operational expenses, such as program-related supplies in 2025 that are subject to proration because they apply to children 0 to 12, please ensure that you use that same method to split or prorate based on 0 to 6 expenses when you're completing your 6 to 12 reconciliation in January and your FAIR template later in April. So those are just some helpful reminders related to school age funding, if that applies to you. And then moving on to slide 19, this is just a sneak peek into 2026. Actually, it's not that much of a sneak peek. We came out maybe about 2 weeks ago with a memo providing an update about our request for proposal, our procurement for some third-party vendors to support us with some reporting requirements. So we're very pleased to announce again that there were 3 great organizations that we've contracted to work with in 2026 related to the ministry's new requirement for direct engagement to report on compliance. So these organizations will support us with our existing periodic funding reviews, but they are also going to support us with this new requirement from the ministry to sample 5% of center-based and home agencies in receipt of CWELCC funding. So these organizations are HDCPA, RSM Canada, and Deloitte. And for more details related to these direct engagements to report on compliance, will be coming out in 2026. But just in case you're curious, these reviews are scheduled to take place in June and following, after we've actually received audited financial statements from the sector. So stay tuned for some more details related to that. And then moving on to our last slide, this is just going over some helpful next steps. So once again, following this teleconference, we will be sure to share out all of the materials that are listed on this slide so that you can begin to work with your auditors in preparation for 2025 reconciliation. Another important update is that we plan to send a memo next week with more details related to update task in GovGrants. So we will once again be collecting some additional information related to enrollment in active homes as of December 31st, 2025. So stay tuned for more details related to that. The reporting date for that should align with later in January, similar to the school age reconciliations. And with that actually concludes our teleconference for this afternoon. So we hope that this information was helpful to you related to reporting and reconciliation. With the remaining time that we have, we'll actually hand it over to Sonia, who's going to support us with just moderating for a brief question and answer period. We look forward to just chatting with you and working with you through reconciliation for 2025.